Howdy, everybody. Welcome to Liberty Call. Today is Monday, April 15th, 2024, tax day. Screw the IRS. There you go. I'm not saying anything out loud. I'm just giving the double birds to the IRS. I hope every one of you gets dysentery and diarrhea. Anyways, hope you're having a good day out there. It's a beautiful day here in Colorado. Sun's out. It's like in the 60s. I got shorts on. It is wonderful, although it's going to snow a little tonight. So it's going to get cold for a couple days. But, I'll take the warm weather. It was beautiful all weekend. Me and my wife had a nice anniversary. Well, Saturday was nice because we went down to a museum, saw some Chihuly art, had some barbecue at Rudy's Barbecue, which is one of our favorite places. Not fancy, but, hey, we're not fancy people. And yesterday, the allergy, you can see my face, it's all red, all broke out. It's allergy season here, and it's super dry, so it's just miserable. So I got some eczema, something terrible right now. And my wife is sneezing, and she's not not doing real well. So, I mean, she's not going to die or anything. But anyways, some news notes before we dive into things. There will not be a show on Thursday because I have surgery. We're removing my gallbladder and appendix. So hopefully I survive the surgery. It is elective, so I don't think it's too dangerous. Some robots going in and taking it all out. But anyway, so don't think there'll be a show again on Friday, but it kind of depends on how I'm feeling. I think it's outpatient, so I might be. My doctor said, hey, if there's anything important, don't really do a whole lot on for a few days, because you're going to be coming off some heavy anesthetic. So just word to you guys out there, if you need me for something on Thursday or Friday, I might not get back to you until Monday. So, anyways, if it is your first time watching Liberty Call, if you could give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. Let's go ahead and dive into today's numbers. The market, I'll actually bring up the chart in a little bit and show you how it, something changed. I was busy with other stuff and wasn't really paying attention to what was going on. But the Dow finished the day down 0.65%, 248 points. It was up about 1% at its peak early in the morning, closed at 37,735. The S&P 500 was down 1.2%, closed at 5061. NASDAQ down 1.79%, closed at 15,885. The VIX up 11.09% today. It's up to 19.23. So let me stop here, guys. The VIX, everyone always, what's the VIX? What's that mean? The VIX, in my opinion, and again, this is just how I view it, anything under 20, you got a green light. Markets are probably okay. You're probably okay to, dip your toe into the equity market, at least domestically. Between 20 and 30, that's your yellow light. Be careful. Things are starting to get volatile and, proceed with caution. Above 30, if the VIX is over 30, in my opinion, it's your red light. If you got to take extreme measures, do it, because things are probably going to go the wrong way relatively soon. So, that's just the way I look at the VIX. You can have your own methodology, but that's just how I view it. So, all right. Canada was down 0.73%, Brazil down 0.49%, and Mexico down 1.03%. Germany up 0.41%, the UK down 0.38%, France up 0.43%, Netherlands up 0.07%, Spain up 0.01%, Italy up 0.56%, Switzerland up 0.14%, and Portugal down 1.08%. Russian exchange is both green, MOEX up 0.53%, the RTSI up 0.18%, and the Asian market, starting with the Nikkei in Japan, was down 0.9%, Australia down 0.46%, New Zealand down 0.13%. In China, the Shanghai was up 1.26%, the Shenzhen Component up 1.53%, China 50 up 2.49%, DJ Shanghai up 1.18%, Hang Seng down 0.72%, and the Taiwan weighted was closed. All right, let me bring up the chart like I promised, and there we go. So we can see here, this is the Dow 30, opened up at the open, was up about 1%, and then somewhere around, what was this? It was about 1:20 Eastern time, so about 11:20 mine. It just crashed and just went and finished the day down about, well, we already talked about it, but at its worst, it was down about 0.85%. Same with the S&P 500, was up about 0.9% at its peak, bottomed out at its worst at about 1.38 and finished the day down 1.2. And the NASDAQ was up about 0.7-ish at its highest today, and then at its worst was down about 1.9, finished the day down 1.79%. So anyways, all right. Well, that, like I said, that's the markets today. Kind of just weird, but, I don't know what happened. So anyways, all right, let's get over to the weekly economic update and see what's going on there. All right. Stocks fell last week as investors sorted through conflicting inflation reports and assessed geopolitical tensions. On Wednesday, the March Consumer Price Index report rattled markets, revealing that inflation accelerated slightly more than expected. Bond yields rose and stocks retreated in response as investors feared the news could influence the Fed's rate decision. It did. It will. The 10-year Treasury yield has had its highest intraday jump in 3 years. I think the 2 years up almost to 5% again. Markets rallied Thursday as investors were encouraged by the Producer Price Index report, which measures inflation at the producer level. Unlike CPI, PPI rose less than expected, which sparked a tech-focused rally. Excuse me. Markets opened Friday lower as investors wrestled with the conflicting inflation reports. Fears of an escalating Middle East conflict also weighed on stocks during the week. Concerns about a potential weekend event led some investors to end the week in a risk-off position. Yeah, I think the Iranians, did a strike, and I'm putting that in quotes, more of just a, to look like they did something. So, I mean, frankly, the Israelis probably shouldn't have bombed their embassy or whatever. They're making excuses for, well, it's not an embassy, it's something else. Well, it's not. You probably shouldn't go around the world blowing stuff up. That's just, me, Mr. Anti-War. That's just the way I look at it. So, no, don't get it twisted. I am not opposed to using force against someone who takes something from me. I will cut your innards out if you steal something from me, and I'll nail you to the trees out back and let the bears eat you. So anyways, all right, diving back in, inflated expectations. Minutes from the March Fed meeting published Wednesday showed officials concerned that inflation wasn't slowing down quickly enough towards the Fed's 2% target. But despite sticky inflation, they reiterated that rate cuts were still on the table for the year. Sure. The start of the Q1 earnings season reinforced inflation concerns as several leading money center banks, despite many beating expectations, forecasted lower growth for the remainder of 2024 due partly to inflation and higher than expected rates. On Friday, the University of Michigan's survey showing consumer sentiment fell last month. Some concluded that the survey confirmed what many consumers have been saying for months, that inflation is still in their everyday lives. Yeah, it is. I just went and did a bunch of errands before coming back and doing this, and went to the grocery store, bought just a few things. It was $100. I'm like, oh my God. And 4 steaks at the meat market, that's $100+. It's just, and again, I can absorb this, but other people, they can't, and it really pisses me off. Economic data coming out this week. Monday, we have retail sales, business inventories, housing market index, and the Empire State Manufacturing Index. Tuesday is the housing starts and permits and industrial production. Wednesday, we have the EIA Petroleum Status Report, Treasury International Capital Beige Book, and the 20-year Treasury bond auction. And on Thursday, we have jobless claims, existing home sales, the EIA Natural Gas Report, the Philadelphia Fed Manufacturing Index. Companies reporting earnings this week. Monday is we have Goldman Sachs and Charles Schwab. Tuesday we have United Health Group, Johnson & Johnson, Bank of America, and Morgan Stanley. Wednesday is Abbott Labs, Prologis, and CSX. Thursday we have Netflix, Elevance Health, Marsh & McLennan Companies, and the Blackstone Group. Friday, Procter & Gamble and American Express. All right, so that is the weekly update for this week. Do you feel smarter? I know I do. Yes. Okay. All right, let's get to the market recap. Dow slides on geopolitical tensions, spike in Treasury yields. Yeah. Well, the U.S. and their allies would stop going around causing wars. We wouldn't have all these problems. But I know there's a lot of people, we're just defending ourselves. Yeah, no, we're not. We create most of these problems through our own, deep state and our own military. So trust me, I served in the military 30 years ago. I know how the sausage is made. It's nothing but a jobs program for lazy people. All right. On Monday, the Dow Jones Industrial Average experienced a downturn driven by a surge in Treasury yields, overshadowing positive earnings from Goldman Sachs. The spike in yields followed stronger than expected retail sales data, indicating robust consumer activity and dampening expectations for Federal Reserve interest rate cuts. Treasury yields surged, with the 10-year yield rising 11 basis points to 4.61%, fueling the retail sales growth exceeding economists' forecasts. The Retail Sales Control Group, which significantly impacts GDP, also outperformed expectations, prompting some economists to revise their Q1 economic growth projections and suggesting a delay in rate cuts. Despite the overall market decline, Goldman Sachs saw a nearly 3% increase in stock value after reporting a notable jump in Q1 profit, driven by strong performance in underwriting, deals, and bond trading. Charles Schwab also contributed to offsetting financial sector losses, with its stock rising 2% following first quarter earnings that surpassed Wall Street estimates. Way to go, Charles Schwab. Don't want you going out of business since now you're my custodian, since you and Ameritrade merged. So not that it's that great, but I mean, it's not terrible. I mean, it's new. I used Ameritrade for, going back to 2015. So was that almost like 9 years? You use a platform, you kind of get used to where everything is at. I go into the Schwab system and I'm like, where is this? And it's a giant pain. So it's fine. It works. However, tech giants Apple and Tesla face stock declines, with Apple experiencing a 2% drop due to losing its position as the world's top phone maker to Samsung. Yay! I have a Samsung. Tesla's stock fell over 5% amid reports of potential large-scale job cuts amidst declining sales. Yeah, electric cars are stupid. I mean, seriously, folks. I thought they were cool. This was probably back in 2009 or 10. I was in my Friendswood office. I remember sitting there across from Baybrook Mall, reading, all about the new Model S, whatever the first one was that came out. I thought it was the coolest thing than sliced bread. But also back then, I lived in Houston. I had plans of moving into like the downtown, corridor, and so I could be close to Astros games and things like that. Well, I came to Colorado on a vacation in 2016 and was like, holy crap, it's beautiful out here. Why do I want to live in the city anymore? Well, actually worked out pretty good. I haven't had to deal with all the COVID stuff and any of that. I can just walk outside. It's just deer and bears and mountain lions. Well, not everywhere, but the deers are very friendly. The turkeys are friendly. I don't get too close to the bears. So, all right. Meanwhile, Reddit Inc. saw a more than 5% decline after several Wall Street firms initiated coverage with mixed ratings and assessments of its valuation. Geopolitical tensions escalated by Israel reportedly considering responding to an attack from Iran, raising concerns about broader conflict in the Middle East and prompting investors to seek refuge in safe haven assets like gold. That's probably not a bad idea. Overall, the market sentiment was influenced by a combination of factors, including economic data, corporate earnings, geopolitical developments, or contributing to a volatile trading day for stocks. Well, if it wasn't for the Israelis, we'd have very few problems. So, but they got to go around, oh, woe is me. They're always the victim. It's like those, after the October 7th or 6th, whatever the thing, when Gaza attacked back in October, you got these college students like in New York who are like, oh, I feel oppressed. I feel like I've been attacked. It's like, you live in New York. You're fine. Calm down. So anyways, all right, last up, article from First Trust, Mr. Brian Westbury. This week's article is Elections Matter. So let's see what he had to say. The current geopolitical and fiscal challenges echo the tumultuous, I can't say that, period of the 1960s and 70s. The mistakes made in both areas compounding over time, leading to significant consequences. Following the Vietnam War, U.S. weakness may have emboldened acts of terrorism, such as the 1972 Munich massacre and the Iran hostage crisis. Again, that was mostly our doing. Additionally, fiscal and monetary policies became unhinged, resulting in stagflation marked by high inflation and unemployment. Presidents Johnson, Nixon, Ford, and Carter all made missteps in foreign and fiscal policy, contributing to these issues. However, the election of Ronald Reagan marked a turning point. I don't know about that. Despite concerns, Reagan's presidency saw an end to stagflation and the fall of the Berlin Wall. Well, the wall fell in 1989. He was out of office by then, ushering in a more peaceful era. Well, I would argue that Reagan was nothing more than Joe Biden with George Bush's senior's hand up his butt, moving his mouth. So He was basically just a placeholder, which a lot of conservative Americans really, really liked. But if you look at his policies, look what he really did. He was a gun control advocate, again, just like the Bushes, and he was all for foreign wars. We were involved in all sorts of skirmishes all over the Central America, South America, and obviously in the Middle East. I mean, we've been causing problems there for before I was born, and I mean, yes, things got better, but I don't know necessarily it was Reagan who did it. Recent events, including Iran's aggression. That's funny. Aggression towards Israel and unsustainable budget deficits in the U.S. evoke memories of the 1970s. President Carter's decision, particularly regarding Iran, have had lasting implications. His failure to support the Shah and pursue regime change in Iran allowed the Islamic Republic to expand its influence and align with U.S. rivals. Well, Iran is their own country. They can do whatever the hell they want. And us monkeying with their leadership is probably what led to the huge disagreements between our two countries. Furthermore, Carter's changes to Social Security in 1977 exacerbated fiscal challenges. By adjusting future benefits based on real wage gains, Carter ensured the system's long-term insolvency unless addressed by tax hikes or benefit cuts. Despite warnings, policymakers neglected these issues, leading to parallels between then and now. As voters approach the upcoming elections, they must consider the historical context. Their decision will shape the future, highlighting the importance of strong U.S. leadership in addressing pressing global issues. And if you believe that electing someone is going to change anything in Washington, you are a fool. The only way to fix this is to basically destroy the federal government and jail all the federal employees and deport them out of America 2.0. So, because we really don't need the Federal Republic at this point. We don't need to be involved in foreign wars abroad. We don't need to be, we don't need this huge welfare state with all these government jobs and handouts to all these lazy people. I'm talking to you at NASA. Sorry, but that's just the way it is. All right. Well, that's everything I got for today. If anyone needs anything from me, please go to hang on, DSA Financial Group.com. All the contact information's there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.